people outside. It's going to be impossible over the next 2 days to meet everyone. Get connected through the application. It's there for your usage. Also, I want to have a big shout out to our main sponsor again, you miners. They are down at stand A1. Go down and see them regarding business opportunities and mining equipment. Now, up next, just while we are waiting for our next discussion, it is a discussion regarding government regulation in the field of cryptocurrency and blockchain. We will be back in 2 minutes with our speakers to hold fire. Thank you. Music. Tell them to play music. Don't play music. Where's the music? Music. Where's the music? Just don't play music. And welcome back. Sorry for the little bit of a delay. We was waiting for our speakers. They was on the inside stage down at the back of the arena. Also check out, we have got over 146 speakers throughout the next 2 days. But first, let's welcome on stage to discuss government regulations in the field of crypto and blockchain. Let's welcome on stage the co-founder of Chainlink, Sergey Nazarov, and the CEO of Dubai Blockchain Center, Dr. Marwan Zarouni. Let's give a huge round of applause, guys. Thank you.
Hello, everyone, and thank you for attending this session. It should be an exciting one. I'm actually super excited about meeting Sergey Nazarov, and it should be an amazing fireside chat. Let's start by introduction. So my name is Dr. Marwan Zarouni. I'm the CEO of Dubai Blockchain Center. I am also the strategic advisor for Dubai Economy and Tourism Department on everything that has to do with emerging tech, including cryptocurrency, AI, and everything cutting edge, basically. I'll leave the mic to Sergey to introduce himself as well.
Great. Thank you, Dr. Marwan, for doing this chat with me. I really appreciate it. Very excited to be here in Dubai for the first time ever. It's a very cool place. I'm actually really enjoying it here. Lots of great people. So I'm Sergey Nazarov, one of the co-founders of Chainlink, which is the largest decentralized Oracle network infrastructure that has already enabled over 10.5 trillion in transaction value by providing the majority of data, connectivity across bank chains, and a lot of other key pieces of infrastructure in both the DeFi world and the capital markets world. And thrilled to be here in Dubai and to learn as much as I can about what's going on here. So thank you again.
Pleasure.
So it would be really interesting and I think useful for me to understand how Dubai grew into this kind of innovation hub for blockchain and what from your point of view was the set of ideas or decisions that led it to that very valuable, difficult to attain position.
So we started very early, actually. So we started back in 2012. We were exploring how blockchain works. Of course, in the early days, there was only Bitcoin. So Bitcoin was very interesting for us. And we had this law enforcement kind of conference that was talking about Bitcoin and how it's used for illicit activities. And we didn't take it for granted. We literally went down the rabbit hole and explored how blockchain works. And we realized that it is actually traceable, and this is a technology that has a lot of advantages that we have not seen from any kind of preceding technology. And we jumped on board very quickly. In 2014, we had our first Bitcoin conference. The opening speech for that was from one of the advisors for the Dubai Future Foundation, talking about how this is actually part of the future, the Bitcoin and blockchain technology. And soon after, in 2016, we had the first blockchain strategy anywhere in the world, actually launched here from Dubai, and aiming to implement every applicable use case in blockchain in Dubai by 2020. And our strategic partners were both IBM with the Hyperledger Fabric, as well as Consensus with Ethereum, both Ethereum, the infrastructure, as well as their know-how and how this can change the world. And use cases around land department with the land plots, all the way to payments and settlement, and having all these kind of synergies between different government departments, public sector, as well as with the consumers. So that was realized, and all of the applicable use cases were realized by 2020. And by then, we started exploring what is other value takes from the public blockchain infrastructure. Once we understood the tech, we jumped on that as well very quickly. And then the VARA was introduced as a regulator in the UAE, and one of the first of its kind, purpose-built, if not the first in the world, purpose-built regulator for crypto. And the rest, as you say, is history.
Yeah, so I think that's a very logical approach. So you folks started very early, I think partly due to your great work with the Blockchain Center. And I've heard a lot of good things about that, even never being in Dubai and seeing a lot of the progress from the early days. And then there's also the regulatory stance, and I think there's just a general understanding and valuing of the technology, both for public and for enterprise use cases. So it's, I think it's grown into something very positive. I know there's a lot of top teams from the blockchain industry that are basically either legally incorporated or legally incorporated and physically based here. And I'm going to learn more about that myself, but it's very impressive, the amount of great teams that kind of have been aggregated in one place.
Yeah, that being said, I think Chainlink will play a huge role. That being said, I think my next question for you would be, how do you perceive the financial institutions' adoption of crypto, and what role would infrastructure play in mass adoption within the normal traditional finance, as well as things like DeFi and cryptocurrency?
Yeah, so I think we're kind of at a unique stage where DeFi has grown into an inescapable market that's going to continue to grow. But that market only caters to a subset of users. It is currently unable to touch compliant, regulated value, which is huge amounts of value, literally hundreds of trillions. And at the same time, the regulated, compliant value in the banking sector and in the asset management sector, while it wants to interact with cryptocurrencies, it also wants to use blockchain technology to generate new assets. And this is the real-world asset trend of generating new assets that previously wouldn't be possible, like tokenized carbon credits, tokenized real estate, tokenized private equity, tokenized money markets, basically tokenization of everything in the financial system, which is another way of saying that all the value in the current financial system is going to get reformatted into this new blockchain-based format. And then the question really is, how does that reformatting of value from the existing world transition to the blockchain format? And that's where infrastructure comes in. So infrastructure plays a critical role in that transition, because in order to do that transition from basically internet-based or Web 2-based value, you need data to prove things about the value and to also make it compliant, things like identity data. And then because all the different institutions are all generating their own blockchains, similarly how many Web3 teams are also generating their own blockchains, you have this very large fragmentation. And that fragmentation, the technical fragmentation, creates a fragmentation of liquidity. And infrastructure solves that as well by connecting all of the chains and allowing all of them to interact and transact with each other. So this is really the body of work that Chainlink is involved in, is being the most widely used data layer to provide data to both Web3 and capital markets chains, and providing the ability for a connection between all the bank chains and all the Web3 chains and then eventually a connection between the Web3 chains and the bank chains into one, what we call Internet of Contracts. So really the Web3 DeFi world and the capital markets bank chain world will eventually merge into one world of financial transactions driven by a set of standards around data and connectivity as a key piece of infrastructure, in addition to all the blockchains and all the smart contract frameworks that they choose to use.
100%. And I think the Chainlink will be the key driver for this kind of adoption. And I think institutions are already showing that they are interested in this crypto space. We've seen the ETFs, of course, will also talk about Ethereum being the second to be going through that as well. I think banks are right now having finally the appetite, and central banks already driving banks to have part of their portfolios and crypto, as well as having the rails between the DeFi and other financial instruments within the financial bank offering, as well as all these on-ramp, off-ramp kind of mechanisms. Data, of course, synchronization, seamless user interface, not only on the consumer side, but also on the banking side will be extremely important as well. That being said, what do you think is the most exciting thing happening right now? I think for us here in Dubai, we're really excited about the number of projects, including and not limiting to programmable money, for example. What else can you say about that kind of area? Central bank issued cryptocurrencies, maybe some other kind of things that will add value to this kind of merger between traditional as well as crypto-based systems.
Sure. So there's kind of the world of assets, which is where you see a lot of use cases like RWAs, generating tokenized private equity, tokenized real estate, tokenized carbon credits, tokenized whatever you want from the traditional financial system as a superior format for an asset. And it's superior because it proves things about the asset in ways that the existing financial system doesn't prove. For example, what is the status of the underlying asset from the point of view of the validity of the carbon credit or the status of the real estate? It basically gives you a lot of insight as to the value or the current status of the underlying asset or collateral. On the CBDC side, that is much more on the payments side, on the cash leg or the payments leg of a transaction. And in order to do a transaction, you really need both sides. To do delivery versus payment, DVP transaction, you basically need an asset that's going to be bought, and you need a payment method that's going to buy it. And so the CBDC side of the equation, I think, is very useful for creating a regulated, compliant, riskless form of payment. Because one of the big problems with the forms of payment that exist in the blockchain industry today, even in the Web3 world, is that they are not inherently as riskless as central bank-backed money. And a central bank-backed form of money that is legally made riskless as long as the economy and the existence of the underlying central bank is there, and can also be smoothly transacted against an asset in a delivery versus payment transaction, I think is one of the missing pieces of the puzzle, in addition to the existence of an asset. And then beyond that, I think you really need secondary markets. So on the capital markets side, you need the assets, you need the payment method, and you need the secondary markets. And you need that triangle of things to start kind of cycling at greater and greater volumes. And that's getting built right now, yeah.
Yeah, and that circular economy is actually where we will see a lot of efficiency coming into the liquidity provisioning as well within, and merging between the two worlds of crypto as well as real life assets.
Yeah, absolutely. There's a whole other set of use cases in Web3, but those use cases are very kind of innovative, and then I think they're going to innovate, and then the banks will have a lot of capital. And actually, you mentioned the ETF. It's really funny to me how like 2-3 months before the Bitcoin ETF, if you ask the average crypto community member, what is BlackRock? Do you like it? Of the 20% of people that knew what BlackRock was, they would say, I don't like it because that's the man and, they're against this, I'm against the system. But once BlackRock ships a Bitcoin ETF and it raises the price of Bitcoin, everyone loves BlackRock, right? Now you ask the average community member, do you like BlackRock? They're like, yeah, they're great people. Let me tell you all about them. So I think you're just going to see more and more of that when people realize the amount of value in the traditional system, and that the only thing missing is really the ability for that value to flow into the public blockchain world and really benefit both the private chain bank world and the public blockchain world. But the use cases that you're excited about, could you tell me about those? What are the ones you're particularly interested in?
I think Deepin is one of the things that I'm super excited about. Is one of those amazing use cases that you talked about, like providing liquidity for building big things, right? So decentralized physical infrastructure is super exciting. Another thing that's super exciting for me is account abstraction. I think for mass adoption, we need to have an easier way for, rather than saving, a certain amount of number of words as a password, fallback mechanisms. I was on one of the crypto exchanges a couple of days ago, and they had even a feature where if you pass away and your account is dormant, you actually specify your next of kin, so this can be passed to them. So a lot of these friction things that were, native to crypto are now being removed or made easier, and I think this will drive adoption in a big way. And that makes me super excited about the future of crypto, not only in the traditional sense, but in the merger between the two worlds of convenience with institutional ways of dealing with digital money, as well as what innovation crypto will bring to the space.
Yeah, I completely agree with you. I think the user experience in crypto has a long way to go still, and also the ability for basically compliance, so that large categories of assets and payments and value can interface with the world, with the crypto world.
And what do you think is going to be the next thing that will drive mass adoption?
So I think DeFi is going to have another wave of innovation because we work with all the top DeFi protocols, and I'm seeing them continue to generate better and better systems, better and better examples of how the world should look. And when I go to bank meetings with the 4 or 5 largest commercial banks of a specific region, places like Australia, Hong Kong, Singapore, I do see the more technical folks copying parts of the DeFi code and parts of the DeFi contracts and parts of the DeFi model. For example, one concept that is very common and obvious in DeFi is 24/7, 365 market availability. That's not a thing you have in traditional markets. That in and of itself is already like a very big leap forward for traditional markets. And it creates all kinds of opportunities and challenges and so on. So I think DeFi is going to keep innovating and driving the very edge of what is possible with the financial system. And then I think the banking sector, whether that's the commercial banking sector, whether that's the central banking side of the equation, whether that's the payment side, whether that's bank issued stable coins, whatever category of traditional stuff you can think of, once that is on a set of standards and on a set of connectivity rails so that it can transact between both banks and Web3. Admittedly, Web3 transactions from banks will take longer, but now they're kind of getting in position to transact with each other. And once they've been positioned to transact with each other, they can transact with Web3. And by then, hopefully, the legal clarity that's being created here in Dubai and other places will allow enough of the banks and asset managers to put more and more of their value on chain in a way that is able to legally interact with DeFi and Web3. And then everyone's gonna love that idea even more than they love the idea of a Bitcoin ETF. That's kind of just like the very beginning of that, very small beginning of that set of ideas.
100%. And that being said, what do you think is your advice to Dubai and the UAE to enable these kind of mass adoption in the region, as well how to position itself to be a leader in this space? I know that Dubai right now is one of the leaders in this space and driving this, but what do you think will happen in the next 12 and to 24 months that will be really the key driver?
I think there are generally 2 or 3 top metrics of success that are different for Web3 and capital markets. For Web3, I think the metric of success will be the amount of teams that are incorporated here and physically here, and the ecosystem that develops for Web3 applications to be built legally incorporated and run here under a set of regulatory frameworks. And so the thing that Dubai can do there is continue to create safety and clarity for how digital assets, sorry, not digital assets, how Web3 crypto things work and can work and should work in a way that removes legal risks, creates clarity, creates safety, creates the ability to make regulated stable coins that can be used with minimal risk and so on, like all those types of things. That's on the Web3 side. On the capital market side, I think it's a question of how many domestic transactions happen between banks and how much value is on bank systems that have changed it to the blockchain format. And then the second metric for capital market success, and this is the real metric, is how much value flows between somewhere like Dubai and Singapore, and Dubai and Hong Kong, and Dubai and Sydney, and Dubai and some of the other more progressive jurisdictions. That, I think, is the real metric of success, but that metric of success only begins when you have transactions within a region, because everyone, in my experience, is more comfortable doing transactions in their own region with counterparties that they understand, with legal dynamics that they understand. And then once they've done enough of those transactions, what I find is they're like, we can do transactions with each other all day long. It doesn't grow the pie. It does grow the pie if there's a Dubai-issued asset that someone in Hong Kong buys, and then if that person in Hong Kong can resell that asset to someone in Singapore, and they can resell it to someone in Sydney, and that asset can move across a set of cross-chain rails like CCIP, and there can be data to facilitate those transactions. That's kind of the body of work we're working through. But I think there's really these two paths for the success of Dubai as an ecosystem. There's the Web3 path, and there's the capital markets path. And then eventually, if you succeed in both paths, you have a robust kind of fintech, DeFi, Web3 ecosystem, and you have a high-quality capital markets ecosystem that can do blockchain transactions. And my very strong view is that eventually those two ecosystems merge into a single internet of contracts, and the place that creates the legal clarity for that to happen sooner will have it happen sooner. So legal clarity, I think, is a big area of leadership.
100%. And it's not only legal clarity. Like you said, it's not only, we are not an island. So not only legal clarity, but also passportable, rules where we in Hong Kong, for example, we in Singapore and other key areas can agree on the fundamentals as well to enable this kind of exchange of value and secondary and trinary markets to exist in different regions and have this seamless kind of flow of funds and with everything on-chain and off-chain working seamlessly together. So I think this is super exciting, and I think Chainlink will play a huge part of that as well. So thank you for that. I think we're running out of time, but so it was an amazing talk, and looking forward to speaking with you further in the future as well.
Thank you very much. Glad to be here. Thrilled we had a chance to chat. Thank you for having me. Thank you.
Pleasure.
Hello. Thank you, gentlemen, for an inspiring discussion here.